Hello friends and welcome to Coin Mühendisi Global. The ninth video of our Introduction to Technical Analysis series is MACD indicator and how to use it. Before we start, I would like to say that you can have all the crypto information you need for free from our YouTube channel. So do not forget to subscribe and keep the notifications on for our upcoming videos. Moving Average Convergence Divergence, or shortly MACD, is one of the most commonly used technical analysis indicators. It is a trend following momentum indicator, meaning it looks at an asset's momentum to ascertain whether the trend is up or down, and as such can be used to provide trading signals and identify trading opportunities. You can add the MACD indicator from the indicators folder by typing MACD on the search box. The MACD is calculated by subtracting the 26-period exponential moving average from the 12-period exponential moving average, and the result of that calculation is our MACD line. A 9-day exponential moving average of our MACD is called the signal line, which can function as a trigger for buy and sell signals. Buy and sell signals can be generated by two moving averages, the long one and the short one. When the short moving average rises or falls below the long moving average, buy or sell signals can be generated based on set parameters. The MACD indicator works using three components: two moving averages and a histogram. The two lines within the indicator may look like simple moving averages, but they are in fact layered exponential moving averages. The main slow line is our MACD, while the faster line is the signal line. If the two moving averages come together, they are said to be converging, and if they are move away from each other, they are diverging. The difference between the two lines is represented on the histogram. If the MACD were to be trading above the zero line, it would confirm an uptrend, and below this line, the indicator would be used to confirm a downtrend. The histogram or bar chart included in the background of the MACD displays the difference between the MACD and the signal line. When the MACD is above the signal line, the bar is positive. When the MACD is below the signal line, the bar is negative. When the market price is moving strongly in a direction, the histogram will increase in height, and when the histogram shrinks, it is a sign the market is moving slower. This means that as the bars on the histogram move further away from zero, the two moving average lines are moving further apart. Once the initial expansion phase is over, a hump shape will likely emerge, and this is a signal that the moving averages are tightening again, which can be an early sign that a crossover is impending. That is it for today. I hope you have enjoyed our content. If you did, please drop a like under the video, and if you would like to see more of our content, please click on the subscribe button. Thank you for watching and take care until next time.